Hey, everyone out there. Have you seen headlines like this? The people with good credit scores are getting worse rates than those with bad credit scores? Not the truth. Let's talk about it. Hey, everyone. We've seen a lot of headlines lately about what's happening with mortgage rates, a lot of misinformation going out there. And this has to do with what are called loan level pricing adjustments. In other words, how your loan to value, your credit score, those types of things affect what you'll pay for a given interest rate. Okay. Those things are controlled by what's called the Federal Housing Finance Agency, or the FHFA. They are in charge of Fannie Mae and Freddie Mac, to make it simple. They came into being in 2008 after the last housing crisis. So, what we need to talk about is basically what those things are, the loan level pricing adjustment, and what has happened. A lot of misinformation is out there about the fact that, well, if you have a good credit score now, you're going to be paying more than someone with a bad credit score. And that's just not the truth. Let's take a look at that. Okay, so let's take a look at this chart. What I have here is two charts, the before and after of what's happening with the loan level price adjustments regarding loan to value and credit score. Now, the first thing I need to explain to you here is, why do I have them sort of off, one to the bottom, one over to the left? It's because if you look at that on the loan to value ranges, there was nothing. They didn't look at anything 30% and below. It was basically 60% or below. And so that's why I moved that over there. So you could have the 60.01 to 70% loan to value on the same column, and you could compare apples to apples there. The other thing you'll notice is that the top credit tier used to be 740 and above. Now it's 780 and above. So we're adding two tiers. They also have the 760 to 779. Now, the colors on the chart below, basically what we're looking at is anything in blue really didn't exist before. Anything in orange, that particular scenario is now paying more. As far as paying more than they were in the old chart, and anything green, they're paying less. So there are places where you are paying less than you were. Anything 40% down or more. Even some of them, the majority of, if you're putting 30% down or more, you're going to be paying less than you were. The only anomaly there is the fact that if you have a 680 to 699 credit score and you're putting anywhere from 30 to 39.99% down, then for some reason you're paying more than you were by an eighth of a point. It's 0.65 versus a half a point. Okay, in the old chart. What we're seeing here is that those who are putting anywhere from basically 5% up to 25% down and have higher credit scores, some down to the 680 and above, and then maybe 700, 720 to get the higher, they're paying more than their neighbors who have a lower credit score. Now, when I say they're paying more, they're not paying more than someone with a lower credit score. And look at the columns, just pick one. You'll notice that the numbers go up all the way down the column. Look at the 85.01 to 90% loan to value. If you have a 780 score, it's a quarter point hit, addition to whatever your other closing costs are for this scenario of credit score and loan to value. But if you go down to 639, that same scenario with somebody with a credit score of 639 or below is paying 2 3/8 points more than you are for the same interest rate. Okay. So no, you are not paying more than someone with a lower credit score than you have. Okay. That is not the case. What has happened is, in that orange section, you are now paying more than you would have paid previously. Does that suck? Yes, it sucks. Do I agree with it? No, I don't. But you need to understand that those headlines that are saying people with a higher credit score are now going to pay more than the lower credit score, that is not true, not even true, not even close. Okay. So that's the information for you. If you have any questions for me, please reach out, email, text, call me. I'll be happy to discuss this with you, or any other thing you need to know about the mortgage world. Thanks, guys.